Welcome back. Well, let's talk about a couple of companies. Supriya Lifescience reported what was a mixed set of Q2 numbers. The company reported strong revenue growth, but the margins were under pressure. It has also signed 2 agreements with Kalinga Institute of Technology. We'll discuss this and a lot more. We have with us Saloni Wagh, who's the whole-time director of the company, joining in now. Saloni, hi, welcome to the show. Well, just wanted to start by discussing the margins, considering that it has shown a lot of volatility over multiple quarters. From 46% to, the mid-20s in terms of margins is what you've reported in the past couple of quarters. What is the reason for this volatility? What can you guide us towards when it comes to, say, a sustainable level for margins?
So the main reason for the volatility in margins is definitely the product and the region mix. A lot of the other products in the basket where we don't have a leadership position, but where we are gaining a leadership position, which we are registering in regulated markets, sales have picked up. And that's one of the reasons for the sort of margin drop for this quarter, purely driven by product and the region mix. Going forward, I think a sustainable margin, which we have guided in the last couple of quarters, is 28 to 30%, and we will definitely maintain that.
Okay, 28 to 30%. Got it. Saloni, hi, good afternoon, and thanks for joining in. Your revenue growth was very strong this quarter, over 26% is what you saw. And you said that it was led largely by Europe, which is about 45% of your sales. Can you tell us how much should Europe grow, particularly in this quarter? What is the growth that you're expecting to see in the quarters to come? And is it a sustainable growth that you're looking at?
So Europe definitely has been more than 25% of our total revenue generation. Year on year, we have seen sales in Europe grow, which is also because a lot of our large products are seeing very good traction in the European markets. Some of the other products in the basket, which I mentioned, one of the reasons for the revenue growth is that other than the top 3-4 products, we have seen good volume traction for some of the other products. Once we get the CEP and the European registrations, definitely those products will also grow more in the Europe market. So Europe, along with Latin America, because we are focusing now on registrations in Latin American markets like Brazil and Mexico, where there is a very large potential. These would, I would say, would be some of the top markets for the company going forward.
All right, so those would be some of the top markets. We'll talk about those markets in just a bit, Saloni. Just wanted to know about the CDMO space itself. You have been an exclusive API supplier for a key CMO project for a European company, and you said you've seen 2 similar opportunities, one in API, the other one in the advanced intermediate space. Can you tell us what companies are we talking about here, and what perhaps could be the opportunity here? What's the progress there?
So in terms of the European company, very happy to say that DSM Firmenich, one of the largest companies globally in the vitamin space, we have done a tie-up with them. We would be the exclusive suppliers for vitamin B2 product for them going forward. It's a 10-year contract with a fixed annual quantity as well as a fixed price. So that definitely will de-risk our business. The project is moving really well. We will now start supplying some commercial volumes to them from the next quarter. So that's one of the key projects we have been working on. The other CDMO opportunity which we had announced was in the protein space, where we are bringing in a revolutionary technology from the US, which will convert your normal protein into optimized protein. Here also, the potential of the business is extremely large. And in the next 6 to 9 months, I would say we'll start seeing commercial volumes from this project as well. And of course, the 2 new projects that we have recently announced with the Kalinga Institute of Technology, those projects are also one of the strategies for moving into the CDMO space, where we want to cater to unmet demands in the Indian market at a very, very affordable price. So I think we are doing well in terms of the CDMO space, and in the next 3 to 4 years, you will see a large part of the revenue getting generated from the CDMO space for the company.
Sure. Just on that point, the CDMO project where for the European company, you said that it's going to start, accruing in terms of sales next quarter itself. How much is the opportunity? What can we see in terms of an addition to revenues in the second half?
So at the maximum, I mean, in another 3 years' time, this particular opportunity has a potential of approximately 40 to 50 crores in terms of revenue to the company's top line. But it will take 3 years because the company operates mainly in the regulated market space. And we are currently doing our registrations in Europe as well as in the US and Japan for this particular tie-up. So let's say in the next 3 years, at its peak potential, it has around 40 to 50 crores of revenue potential.
Okay, Saloni, we'll let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. That's Supriya Life Sciences. Let's slip into a quick break.